Okay, so today's topic is about support and resistance. It's a very important topic in terms of trading, understanding where the support is and where the resistance is. So I will explain to you. It's not a complete discussion because it requires a lot of time. So I've packed it in 11 slides, and I'll explain to you as much as I can for support and resistance, identifying it, understanding it, being aware of analyzing the support and resistance before putting on the trade. So it helps us stay away from bad trades. So support and resistance help us stay away in bad trades because we tend to just focus on momentum and what's going on right now in the trade. So what is visible there because um, we see something moving. There's a news there. There is some activity there. So we get excited. And then when we don't analyze the support and resistance, so we just get caught in the trap. So the trap is there and we are just sucked into it. So um, taking a breath, taking a pause before entering in the trade and reminding ourselves that, oh, I need to check the support and resistance. What is happening here? How far it is, and in terms of profit and in terms of loss. So understanding support and resistance and calculating the ratios from the entry price. So how far is the support and how far is the resistance? Because that's what it will tell. It will tell you how much potential you have in the trade and how much risk you have. So that's what support and resistance do. So, and then I'll show you some charts of the previous trades. So support and resistance and the charts. So let's start. So what is support and resistance? So understanding before understand support and resistance, we visualize any chart, any symbol. So we would see that the prices are moving in a series of peaks and troughs. So one day the stock goes up, another day the stock goes down. So there's a peak and valleys, etc. So directions of these peaks and troughs determine the trend of the market. So higher highs and lower lows, etc. That's what they're talking about. So so understanding what is happening is higher highs are being made, lower lows are being made. Sometimes higher high and higher lows are identifying higher highs and lower lows are good, but it's not enough. Maybe that's too late by the time we identify a higher high and lower lows, because that may be the end of the trend. So just keep that in mind also, that that could be the end of the trend once we figure it out that it's making lower lows and higher highs. So uh, we want to get in before the start of the trend. So I'll explain. Troughs or reaction lows are called support. So anytime the market moves down and hits some level and then bounce back up, so that is called support. So that's the definition of support. When a symbol hits some level and it doesn't want to go down, it goes up, react. So it can break later on, doesn't mean it will not break, but that's the reaction low, and that's what we call support. Oh, it hit, it was trading at 110, it dropped to 100, and it's bouncing right now, and it's trading at 101. So that 100 is we call it 100 support. So we just give a meaning to that price where it made a reaction low and call it the name support. So that's the support. So whether that support is strong or whether it will hold, what will happen in the future, we don't know. So we just call it the reaction low as support. Now, peaks or reaction highs are called resistance. So imagine this scenario: the stock is trading at 100 and it goes to 110 and then it drops to 108. Let's say intraday, and it closed at 108. then we tend to say, okay, 110 is the resistance. Now, that resistance was created today because we can see it went to 110 and it closed at 108. So now 110 is the resistance. Now, it doesn't mean that it will not be broken tomorrow. So the first time any price hits the first time is just it's the first time. So we need to know how many times and what else has happened before at that price. So reaction high called resistance. These reaction highs are, if you look at the intraday chart, you would see intraday highs and intraday lows. These reaction lows and reaction highs are being created all day long. So reaction highs and reaction lows are being created all day long in intraday chart. Whereas on a daily chart, so you see only one bar. On a weekly, you will see the weekly resistance support. So uh, if you want to learn something, try to learn on the intraday chart because that's where the things are moving and you can see the resistance and support. So the lower the time frame, the more you learn. And something which is moving fast, the more you learn. If you're learning from the slow mover, or if you're learning on a monthly chart, weekly chart, you would learn very, very slow. So the time is just frozen on a monthly and weekly chart, whereas the time on the 30-minute, 5-minute, 15, 60 is moving fast. So if you're learning something, try to learn on intraday basis. So understanding support and resistance is the key to identifying the trend in the market. So the trend changes, and when the trend is changing, it's telling you through support and resistance. So identifying these support and resistance, if we know already the support and resistance levels, if we know already, and or during the day we identify the support and resistance, then we can detect the formation of the trend early in that market. So because the support and resistance is where the battle was uh, you know, fought, where a lot of buyers and sellers got killed. So, we say market have memory. So that's what it is: support and resistance. Market have memory, and it's in the form of support and resistance. So we anchor or we take help. So anytime we're doing something, we need to take some help. So anchor. So like so I was buying a property, and then I found out, oh, there's no anchor. The property is just sitting on the brick, so there's no support. I need to do something. So it's better if that property is better if it has anchor. It's properly secured. So same way the stock, if you're getting into long, then you need to know where how secure is that this trade is. So where is the support? So the stronger the support, the better is the trade, the less likelihood of you losing the money if you're going long. So that's the first key. When we're going long, we immediately need to ask, man, where is the support? Okay, is the support nearby, or how far is it? Because when the stock drops, I'm going to lose the shirt. I don't mind losing shirt, but keep the pants and underwears, etc. So identify the support, and then at the same time, then identify the resistance. The support may be very strong, but the resistance is right there. So what's the point? Who will win? I don't know. The support guy will win or the resistance guy will win. So there needs to be some kind of analysis needs to be done. Where is the support and where is the resistance? So anytime the trade comes on our screen, we need to go and check support and resistance. So understanding support is identified by previous reaction lows. So anytime we go back in the chart and identify all the reaction lows, whether on an intraday basis or on a daily basis. If we are a swing trader, we can take help from the daily chart, and an entry is at the lower level, but the support and resistance is on the daily chart. Support sometimes hold the down move. So support doesn't mean is there and we are very secure. It's not 100% guarantee. So it may hold the down move. It may not able to control the down move because support can be broken. So it's just a matter of who is winning at that time. If there are a lot of sellers at the same time at that price level or within that range, then the support is broken. And once the support is broken, then all the buyers who were at the support. So now look, understand the psychology. When all the buyers who were there at the support, new buyers, previous buyers, just joined buyers, long-term buyers, they were there, and now the support is broken. So what happened? They want to, they just can't wait for the market to come back to the same price, and they get out at break even or slight loss, or they average down on the way up, and then they sell it knowing that that's the support and it was broken early. So if I bought Apple at 150 and it's gone to 137, I'm losing 13 points. So now on the way up, so my cost base is 150 unless I average down. So on the way up, I average down at 140, 141. So my cost goes to 145 or 146. So if a lot of traders are doing the same thing, their cost basis is not 150, is 145. But there are some who have at 150, 149. So now the resistance, because 150 was the support. So now the support, it became 150 became support resistance, but that's not the only resistance. The resistance is getting created at the lower level. It depends where they are averaging it down. If there's a big guy who bought a lot of shares and he brought it down average cost to 145, so when Apple goes to back to 145 from 137, he will sell at 145. So now you will wonder, and you will say, "Oh, I thought 150 is this was the support, and it was broken, so it should be 150 as a resistance. How come it's selling, getting sold out at 145?" Well, you don't know how much the buyers who bought at 137, fresh buyers, those who did not have a position, they bought it at 137. Somebody bought at 139, somebody bought at 140, somebody is averaging it down because their cost is 150. So they're averaging it down on the way up. And now their average is, let's say, 142. So now they want to take some profit at 145 and they sell it. So now 140, if there's a big buyer seller who bought at 150 and average it down, then this big seller will sell at 145. So now there is a lower, a new resistance level is created, a new channel from 145 to 150. So the support turns into resistance, and the resistance turns into support. So there is a polarity. It's called polarity principle. The polarity is changing. The support is turning into resistance. Resistance is turning into support. So as the trade is progressing, we need to constantly evaluate. So understanding resistance. So what is resistance? Resistances are identified by previous reaction highs. So anytime the stock goes and hit a certain price and pull back significantly, that is a resistance. So the stock goes from 100 and 110 and it pulls back and closes at 107, then 110 to 107 is the resistance area. Resistances are pauses in an upward move. So it's just a pause. So sometimes it's just a pause. People take profit, they sell, and usually the resistance is created at the end of the day when people take profit. Now these resistances are overcome in the future. So these resistances can be broken in the future or may not. Again, the same concept as the support. So keep that in mind. The resistance and support is not just a single price, it's a range. So I explained to you in this example support and resistance in an uptrend. So here is the market is in uptrend. As we can see, it starts from here and it ends at 5. So first time, we don't know what else is happening on the left side. So we are just taking from the middle. So we don't know what else has happened on the left side. So resistance, the market hit the resistance. We at the time when it's hitting the price point identified as 1, we don't know that this is a resistance unless we can read the chart on the left side. So there are way to identify the resistance and support in advance. So let's say the market hit one and pull back to some point two, and now it's bouncing up. So we can say, because this was a meaningful pullback, so resistance one, there is a resistance at one. And now when the market pulls back to point two and moving up and significantly moving, we can say that point two is the support. So this is the support, this is resistance. On the way up from two to one, market, we don't know what the market will do. It may halt its move at one and pull back and crash, or it conquers the resistance at one and moves up. So um, it also depends at what phase of the trend this phenomena is happening, whether it in uptrend or downtrend, etc. So this is another topic: what phase this phenomena is happening. So let's say the market moves up, conquers the resistance one, and then keeps going up and up in a straight line. Or this chart is shown to you in a line fashion. If you look at the bar, or if you are looking at from the point of view of candles, and a lot of things may be happening in between. But let's say it reversed from point two and it hit point three, some kind of resistance is created, and then it pulls back. So when the market is pulling back, if we are going short here, let's say we got the signal here at three. So we have a way of identifying that this is the resistance, and there is a sell signal here. So we got the sell signal at three. So when we get the sell signal, we need to immediately, if we get the sell signal and we don't go and do further analysis, we get excited and we don't do any further analysis, we may get caught, because the support may be right below the resistance. So we need to know where is the support. So how we find out where the support is? We go and look at various way. Where is the previous turning point, where the market has pulled back and rebounded, or where was the resistance which got conquered? So in this scenario, what we're seeing is that this was the resistance and it got conquered here at this level. So now this is the support naturally. So the support and resistance are created is based on the human psychology, the trader psychology. So if we understand the psychology, we understand how these price chart patterns are getting created. So it's just a bunch of traders, millions of traders, they are just trading with each other. Somebody's buying it, somebody's selling it. So they are the ones creating all these patterns. So or the machines are creating it. So understanding why this happened and what's the meaning behind it. So there is a meaning. So we are assigning the meaning. So what the meaning we are assigning is, we are saying that this was a resistance. There must be some buyers here after all, because the stock got traded here at some point. So there must be some buyers, right? That's why the price went here, but then it pulled back and then it rebounded. So when it rebounded and crossed, there are some more buyers. So there are buyers who so try to understand this, that what kind of buyers are there in the market. So there are thousands kinds of buyers. They have different kinds of criteria. So they have different criteria, and when their criteria is triggered, they get in. And then there are traders whose criteria for sell triggers and they sell. So maybe this buyer's criteria, who knows, he wants to test. He doesn't buy first time. He say, okay, I want to for some meaningful pullback, and then I will buy. So maybe he bought at two, price point two. Maybe he has another criteria that when the resistance point one is conquered, I will add more to the position. Or maybe there is another buyer who says, no, I don't believe in this pullback. I would buy, my buy order will trigger when this price point one is conquered. So he sets his sell order, some buy order here right above the price point one. So there are different buyers creating traders creating their buy orders, and then there are traders who did not do anything. So they just sat on the sideline and now they are regretting it. So those guys who are regretting, so think about those guys, those who are regretting that I did not buy and the market just went by without me. So they're waiting for the opportunity. I met one lady and she said, "Well, I bought the house in 2005." So she bought the house in 2005 and 6, and then she saw the downturn in 2008 of 9, just like we saw, and so her property went down 50%, and then she proudly says to me, "I sold it at 2016." So I look at her face, 2016. So I said, "Oh, so you don't have any property right now?" She said, "No, I'm waiting patiently for the market to come down." So she did like this. She bought somewhere here. This is 2008, 2009. She saw this move all the way, 10, 11, and then when 2016 came, a little bit up, she sold. Now it's 2022, so she's waiting for this to happen. Maybe the price to come down at 2000, at price point 4. So she missed all the move from 2016 to 2022. So a lot of properties got doubled. So that's her strategy. So think about that, the trader. So the trader didn't buy it here, he missed out, or he sold his position. Maybe he sold at break even. So think about that. He bought price point 1 and immediately he saw the loss. So think about that guy who bought at price point 1 and immediately the market tanked. And when it went back to, so he put his sell order in on break even and he sold. And then the market just took off. So it happens to all of us all the time. The market just takes off. So when the market took off and went to point 3, he's not buying it. Now the market is coming back down and he's happy. We feel happy sometimes, like, okay, I want to buy another house, but if the market is going up, I want the market, the real estate market to crash, and then I will buy. Or I want this stock to crash, then I will buy. So when the stock crash and come back to the price point 4, where he saw the break, resistance break happening, or when he saw he's selling his position at break even, he will buy it. So he is the buyer at this price. So think about all these human psychology, the way the humans are thinking, they are creating this support. So that's the way the support is created, is human psychology. So if we get the sell signal at 3 and we evaluate this price point 1, so there is a distance here from 1 to 3. This distance needs to be enough for us for a profit, for the profit. And also we need to know, is there any other resistance on top? Any other resistance on top? So need to evaluate all those resistance levels. So there are techniques to evaluate by looking on the left side and going through the chart and figuring it out if there is any resistance. Why? Because if we are shorting it at 0.3, how much we can lose and where we will be getting out. So it can pull back a little bit and then it takes off. So when the stock takes off, we need to get out. And if we are right, we are reading the sell signal correctly, then where will be the profit. So this is the profit, the first profit level, price point 4. And then the second profit level is price point 2. So not only we looking at the resistance, previous resistance, which is now support, but now the previous support also, which is a support. So there is a support, there was a support before, which is still a support, and then there was a previous resistance, which is now a support. So in other words, when this happened, then there is a channel here. So you see the channel. So this is the channel, which is a strong channel. So anytime the stock goes in this channel, drop suddenly, let's say there is a big sell-off at price point 4, and not at price point 4, but at the time when the market was trading at 4. price point 4, and the overall market is bearish. You see Dow Jones down 800 point, S&P down 100 point. So what will happen? Do you think those who have a buy order at price point 4, they will keep their buy order? They will cancel their buy, all the buy order, all the bids will be canceled. They will say, oh, no, no, no. I was planning to buy on price point 4, assuming the market is going up. But now I don't know, the market is just going through hell. So I better cancel all my sell order, buy order. So they will cancel all their buy order. So all the support which you see is not there. And then you say, what's wrong with my trading? Why you put the buy order and you forgot, and then you caught the falling knife. That's what we say, catch the falling knife. So we catch the falling knife. So if you catch the falling knife, and where the knife can land, it can land at this line. So you have to extend this line from 2 all the way here on the right side, because this is the channel. So unless the market also stops going down, while this market, overall market, stops going down, and this market is trading in this channel, then this support at price point 2 may hold, because then the buyers, the traders will say, okay, not only we were planning to buy at 4, but we have a chance to buy at 2. So the stock goes through the consolidation mode. So this is where the consolidation will trigger, and the stock, God knows how long the stock will hold in this narrow channel. And maybe it will break the 4 on the upside, or maybe it will break the price point 2, and then it will break this low, and the new low is created. So understanding all this, the human psychology, and who is there, how many participants are there, how many, where they are located, where is their interest, at what price they are willing to buy, you have to read through the psychology, what price point they are willing to sell, what price point they are willing to buy. Uh, Also, how long this has happened, how many days have passed. Uh, you know, so I'll show you some other charts. How long this has happened, how long they have been bearing this pain. So support and resistance in an uptrend. Now, if we flip that chart, and support and resistance in a downtrend, so just same concept, same human psychology, is just in reverse. So always be trying to, people pay attention, people just people just trying to, or trader trying to read the technical stuff. They just want to read, candlesticks, and they just want to read some draw the lines, etc. But more than that, you have to also understand the psychology. So that's what the psychology people say. Oh, trading is about psychology. Yes, about psychology, but what psychology? So you have to dig deep. You have to spend time. You have to think. You have to read some books on these topics, and then you think when you're trading that, okay, this is what that guy was talking about. So do some reading on various topics. So support and resistance in a downtrend. So this is the support, and why I'm saying support. The market when came down and hit some level at price point and bounced back up. So I say this is support. It was trading at 100, it dropped to 95, and then it bounced back up. So I say, okay, 95 is the support. Because why I say support, because it bounced back up. So reaction low, but bounce back up, it's a support. And then it bounced to 98 level and pull back. So then I label it resistance. So I give a meaning and I say, okay, this is the resistance, this is the support. Now on the way back down, I'm hoping market will hold at price point 1. It can. The strong trending stock, those who are fundamentally strong, they are looking great on a weekly chart and a monthly chart. They don't break just like that. If that's why they say, oh, look at the weekly chart and monthly chart. So if there is a difference between pullback and a crash. So on a weekly or monthly chart, if the stock is strong, then if you look on the daily chart, then this you would expect that the price tested. It can test again at price point 2, and then it can bounce back up. So when it bounces back up, your entry, if you get the buy signal here at price point 1, let's say the price is pulling back from 2, then if you can read it correctly, buy signal, you can go long here. Another buy signal will come when the resistance is broken to the upside. So that's um, that's another signal, or you can get trapped. So there are a lot of ifs and buts, like um, people say like this, when they are somebody is presenting some argument and the other guy say yes, but, so there could be yes and but, or yes and, so there are a lot of scenarios, yes but, yes and, if then else. So trading is all about that. So support here, bounce back up. I got the signal here. Somehow I got the signal. I initiate my position, but I am wondering what will happen. The midpoint, 50% retracement from the high. So if the 50% retracement is conquered with where the market halted and went up, I get another buy signal. I get another buy signal. If this high from where it broke down, I get another signal buy, I buy here, or maybe the market pulled back here and then it pulled back, it moved up, then I get another signal. If not, then the market just tanked. So when the market tanked, where is the support? We don't know unless we can read the chart correctly by looking on the left side and figure out where were all the turning points and support and resistance, and where is the possibility of a next support. So let's say we saw this price point 3. This is the support, and the market moved up. So when the market moved up and we got in long, we got the correct signal here, point 3. Through our technical analysis, we got the signal. Now, where is the exit on this downtrending stock? So remember, this is a downtrending stock. So where is our target would be? The first target would be immediately below this price point 1, because this is where all the buyers are trapped. The buyers are trapped and they will be exiting it. Or there are new buyers here at price point 3. There are new buyers here on the way up. They are adding. And maybe there is just the buyers on the way up are more than the buyers here. So all these buyers on the way up, they know that there are sellers sitting here at price point 1. So they would sell. They don't want to get caught at they're not greedy. They won't sit at to sell at the high based on the price point. They would start selling even before the price point 4 hits, because the average is low. Maybe they bought it at 3. So now the market may not even touch the price point 4. It just crashes. The waterfall decline. So now we wonder what happened. So this is the scenario I was talking about. The price point 1 is 150, and this is 135. Price point 3, price point 4 is 150 again. So it may not reach 145 because the other traders bought more and more and average down, and it just start tanking at 145. So the ultimate sell signal will come in the market when this price point is taken out, which is price point 3. So recognizing that now the market is really crashing. So remember, some key lows are made. Those key lows should not be violated. So this is what it is. This is a key low. Price point 3 is a key low. On the way down, it should be held. If it's not, then the market is going much lower. And why is key low? Because there was a low here, tested, moved up, then pulled back, tanked, then rose. There's a resistance here. Now on the way back down, this should not be violated. But then we have to see what else is happening here at price point 3. Traders, you just put their sell order just before the low of price point 3, and they get stopped out, and then the market reverses and just kept going up and up. So this is what they do. They just put their stop just below price point 3. Maybe there was another indication somewhere here based on the looking at the left side, there was some indication that there is a support just below price point 3. So there was a support, and that's what it hit, and then the market just rocketed to the upside. So all that analysis goes into trading. So now we talk about the three ingredients of support and resistance. So three ingredients are time, value, and recency effect. So I'll explain to you three ingredients. So time. So time means how many times the market has tested the support and resistance. The more time it tested, the more meaningful it is. If it's just one time, it's not that meaningful. So pay attention to the time. So the more time it has tested, the more weight you will give. So if you have a weighting criteria, the more time it tested, the more weighting you give. So I have a system that I rate uh, more time, the more weight I give. The more volume occurred at that price zone or that price, the more weighting I give. So the volume. So you need to give some attention to the volume because number of shares triggered. If the market sold off at 100 and there was only 10,000 shares compared to 1 million shares, so you would pay attention to the 1 million shares transactions at that price point than compared to 10,000. And you would pay attention to that price point, how many times that support or resistance was tested. So you're calculating number of times, the volume. Also, the recency effect. So how long ago? So I go back 8, 9 months chart. So how long ago? So if it happened recently, it's more meaningful compared to if it happened 6 months ago or 8 months ago. Because 6 months ago, 8 months ago, God knows what they did, where they are. We don't know where those traders are, whether they are holding the position or they sold, they average down, they average up, what they did, we don't know. So 8 months ago, they may not be in the market, those guys. So, but if it happened recently, like last week or 2 weeks ago, they may still be there. So they will act to defend their position, whether it's support or resistance. So recency effect. So recency effect, the volume and the time. So time period, pay attention to how many times. Three or more is dangerous. So count number of time. Maybe you have a system of counting it and giving a weight. The more automation you do in trading, the more you're trading, more more easy your life, and the more easy you make the decision because you're just every time you're doing the same thing, check check check. Every time you're doing the same thing, check check check, yes yes yes. So there's no human is involved, but the human is has taken care of his tendency to forget things. So every time when I do certain things more than one time, two time, and I expect, oh no, I'll be doing this again. I better write it down. My brain is tiny. I'll forget. If I'm doing only one time, okay, I'm not paying attention. But if I need to do it two times, three times, I better write it down because I don't. My brain is tiny and I cannot put the pressure, and I know I'll forget. And if somebody say, okay, you have to do this 15 things in a day, I'm sure I will do only 10. Doesn't matter how many times you tell me to do, I will do 10. So I remember when I was a kid, my mom gives me the grocery list and tells me to go and buy this grocery. So where the grocery, the where vegetables, where vegetable market was, there, that's where my cousin home was. All of my cousins just lived near to that vegetable market. So I go play with my cousin brothers, and then when 1 o'clock, then I buy the grocery and come home. And I'm late. My mom is saying, "Okay, you coming now? Oh, I cannot cook at 1 o'clock." And then gave you 10 items, and then you forgot. You only bought eight. So she asked my uncle. Uncle suggested you give him the list. So she gave me the list, 10 items. Better follow the list. I still did not follow 10. I'm still buying eight, even though I have a list. So I'm not even following the list. So then she tells my uncle, okay, he doesn't follow even the list. So what should I do? So He said, at the end of the list, you write it down, big stick. So item number 11 is big stick. So I'm reading the list and I'm saying, okay, item 10, I need to buy 10 items. And at the end is a big stick, but I'm still forgetting. So even though there was a big stick written at the end of the list, I was still forgetting. So the more you automate, the more checklists you create, the more rules you have written it down, the more trading goes, the more accurate or more profitable is your trading. So if you have a system of writing it down, then how many times a support is tested or how many times a resistance is tested. When I'm evaluating support and resistance, I better find out and write it down 2 times, 3 times. And if it happened again 4 times, I go back and evaluate the volume. What was the volume? How many months before, or how many weeks before this support or resistance was created? So all that goes into trade evaluation. So if you do that again and again consistently, and if you build a system, then you have conquered one area of your trading, which is support and resistance evaluation. So now the last 2 slides in support and resistance is that the support turns into resistance and resistance turns into support. So it's called polarity principle. So when that happens, we need to recognize it. So this one, the support was at 1, the market bounced to 2, so the market bounced to 2, and then we expected the market will hold at 0.1, but it did not. It just broke. So we see that so many times. The market just bounced a little bit and then it tanked. So when it tanked, all the buyers are losing money. They're buyers. Imagine the buyers here, the buyers here, the buyers here, the buyers who bought this pullback, retracement, the dip buyer. So the dip buyer, they bought it here or whatever. They just, you know, one day they woke up and they saw 5,000 shares of Apple in their account, and now they say, "Oh my God, I have 5,000 shares of Apple. I bought it, so now it went to 2, and now it's tanking." So imagine if it's tanking 5,000 shares at price point 1. So what they will do? They will first chance they will get to sell the 5,000 shares at this price point. They will sell. So this support is become a resistance, and then the market just crashed. So all the buyers, we don't know where the buyer, how much, uh, how many traders are there, and what's their position, and how many shares they have. So they bought it here all the way back to 1. They got a sign, or they are dip buyer. They bought it here. They bought it here. They bought at price point 2. Then on the way back, because they missed at price point 2, so now it's again trading at price point 2. Somebody said if this is a good price, they buy it, and next day it tanked and it tanked and it goes to price point 3, and now it's going back up, and then they say, okay, I have enough, and they sell. So this support will turn into resistance. So knowing that this support could be a big resistance, I would be exiting. If I'm going long here, I'll be exiting either at price point 4 or before price point 4, and looking for a new sell signal right here. Knowing that this was the support and it's a resistance, I would be looking for a brand new sell signal. So if I can identify this resistance level in advance by reading the chart, and then so it's like a grave. Buyers and sellers, they fought, and the graves are there, or the memory is there. So the market tells you, look at me, I'm here. Look at me correctly, read me, and profit from me. So the market is telling you, we just don't read it correctly. So if we read it correctly, this is a resistance, and we got the sell signal, then we need to be we need to be we need to change our mental state into bold, courageous, active, knowing that worst come worst, I will get out. I'm wrong. The market will tell me I'm wrong. Where? At price point 2. I will be wrong at price point 2 because I thought that this sell signal is coming right at the right price point, which is resistance. So if I not reading it correctly, I will be wrong at price point 2. and I don't mind changing my position from going short to going long, because if the market has taken over the price point 4, there must be something good happening with this stock. Something has changed, sentiment has changed, all the sellers are gone. So something is going on and I better change my position. So sell signal, waiting for sell signal to occur in this zone and then profit from it. So support converting into resistance and the resistance converting into support. So this market going into price point 1 and pulling back. So um, knowing in advance where the pullback will occur. So there are techniques to identify where the pullback can occur. And if I know the pullback will occur to this price point, then the buy signal should generate. Some kind of a signal is there for me to read correctly. So if I anticipate that the buy market is pulling back to price point 2 after hitting price point 1, then there should be a buy signal here. And if the buy signal is here, I'm correct reading it correctly, then I'm going long, and then I add more to the position when it breaks the resistance line. And then not only that, then I draw the line, I extend the line all the way to the right side, because that's where the market will fight again. So the market goes up to 3, on the way back down, the buyers who did not buy, those who are regretting, they will hold, come back, they will buy, and that's where the support is created. So the resistance converts into support, and the support converts into resistance. So this goes on all day long in every market. So resistance converting into support, support converting into resistance. So this is the end of this presentation, and I'll show you some charts from the previous. So what I'm showing you is a common sense. You will say, so this is after the fact. I'm showing you some common sense trading and identifying and what is happening in the market. There may be some news, um, etc. So here's the win chart. So if you look at the win chart, the win we bought calls, we had calls position and we exited with profit. And then what happened? There was a news came uh, regarding Win or Las Vegas Sand, etc. So they moved together. So there's a big bar going down. So what are the chances of Win to go and conquer this 75 level? If I'm going short here, what are the chances of Win to suddenly just go up when the volume is high and it's breaking down? So it's a big uh, swoop down. So I better buy puts. I bought puts, and then it's just 2 3 days of a down move, more and profit of 78%. Also, what else was happening in the market at that day? When the wind was going down, or was it only the wind was going down, or the other more than one stock in that category going down? Is LVS going down? Yeah, LVS is also going down. Maybe something is wrong with that industry. So I buy puts. So I buy put, sold, and the reason I sold that I see some buyers are coming in here at this level, at 55 level. There are buyers here. So I sold the puts, not the gain. Here is the chart of MGen calls. So MGen moving up. This is to, you see the 222. It looks like support to me when I look on the backs on the left side based on this candle, and here the buyers were here at 222, and now the market doesn't want to go down. It conquered this upper wick. So chances are the MGen will go up then go down. Position myself made 192%. It just gapped up to the resistance. So if I don't sell, MDN is still going up. I think it's at 252, 252. And this was the only, when spotted, this was the one where the market was down and MGen was moving up. So 250, any number like 250, 300, 350, 150, dangerous numbers to hold from below to the upside. So um, if you buy something at 148, watch 150. If you buy something at 174, watch 175. So if I have a Amgen can go to the moon, I don't know, but we had calls, so we sold 250, and this is the resistance 250. You can identify the resistance level. It hit 250, and we sold. It is still trading above 250. Now Baidu puts. So uh, for Baidu, usually the Chinese stock they just go together, one way or the other. So Baidu with gap down back to back, we went short, and then it gap down again. So three gap downs or three gap up continuously is a sign of exhaustion. That three back-to-back gaps. So you can count the gap. One gap here, two gap here, third gap here. So on the third gap, you just sell. And we sold when on this tiny candle formed, and looks like there are no more sellers left. So we sold Baidu puts, made 42%. CLF calls, when CLF, when a white candle is forming after this, there's more analysis than just this common sense. So I'm just showing you some common sense analysis. White candle formed after the bottoming. Maybe there was something else happening in this industry. So we went long on CLF, 20% gain, not much, but 20%. So 20% gain because it started doing like sideways move, and October call, sideways move. We need to get out. FISV put. So again, same chart. If you look at the Baidu chart or other chart or Win chart, they're showing the same style, same thing. The market is trying to move up. You see by these two candles, and then boom, it's just tanking to the downside. So these buyers are no more buyers, or there are no more buyers. The market wants to go down further, and overall the market is going down. So when the overall market is going down, I'm looking for something which is also going down and have some kind of a resistance. So this is what happened. FISV tank, and this is a clear buy signal. When this kind of a candle appears, then there's a lot of phenomena happening. So this is a buy signal. So we better get out on a gap down and then reversal. So this is a gap down, and the market is reversing to the upside. MRVL puts. So when the chip stocks are going down, then okay, so AMD is down, Nvidia down, Intel down. So what else is down? Which is just it started going down. So again, look at this one. It just so everything is going down, chip stock. So I started looking and said, okay, which one I should buy puts. Let me see. So immediately open your chip folder. You need to be prepared. You need to have some chip folder there. Open the chip folder on the on your workspace and say, okay, AMD is here, NVIDIA here, Intel here, MRVL here, AMAT here, all this. Okay, which one? Okay, this one looks better to me. It created resistance here, and it's just red candle falling, and then it next day fell again. So 26.53%. It's not that bad. Here, pin put. So pin. So think about this pin and all the other social media. They are going down. So which one I need to buy? Puts. Looks like this was the resistance at 25, 26, and it's going down. So what are the chances that it will not go down in one more day? So it went down 2, 3 days, and I don't know why we made 13.95%. Only 14%. It doesn't look right, but we made 14% as per this slide. Maybe made more. So what are the chances of when a pin when other social media going down and the market is going down after creating and breaking the 50 day moving average, 2-day 200-day moving average? So we exited here. WMT puts. So maybe the retailers are going down. So what are the chances of WMT to go up and then to go down after creating this red candle after hitting the resistance level? So here's the resistance levels. Here is gapping down. What are the chances of WMT to go up then to go down? So we exited. I think we exited quickly because this what happened. So trader need to be flexible. Just you know, just don't keep sitting there. So I saw this white candle. I said, okay, this may be this is creating. I don't know what happened to WMT, and we had October put, so we sold. made only 16% gains next day. XOM calls. So we trade XOM puts and calls. So so for oil stocks, then you have to look at the oil. Crude is moving up. Yes. Is that the only stock which is moving up? Am I looking at only one stock, or maybe as a group, oil stocks are moving up? So what oil stocks like XOM, CVX, SLV, PSX, PXD, VLO, so all these 6, 7, 8 stocks, MRO. So which one? So XOM, usually XOM, CVX, VLO, these are the ones. So what the calls on this bounce up, maybe the crude was moving up, and here's the support. So on the gap up, sold. 50-day moving average. So 50-day moving average from below act as a resistance. 50-day moving average from above act as a resistance. So when the market, if we enter here and it gapped up, we sold at 164% gain. So gap up. So now XP puts. So what are the chances of XP puts when the XP candle is doing like this, the red candle resistance here, and it's just tanking with a big volume? So chances are going up or going down. Maybe the chances are it's going down. So it went down, and when it went down, it created a little tiny candle. Then we say, okay, it's creating a tiny candle. We need to exit. So 15% gain, exit, because expecting a big red, another red candle, but it didn't happen. So a tiny candle, maybe there are no more sellers. So just exit 15% gain. CCL puts. So now the cruise stocks are just tanking. So when we're looking at CCL, we also look at RCL, we also look at NCLH, and then make up the mind that which one is looking good. So this one is just getting clobbered. Where it's so 24 on the left side, now it's just trash. So this was a nice consolidation zone. You see how many buyers are trapped here. There are too many buyers trapped here thinking $8 is a good price. So you see between 8 and 11, too many buyers. So they buy at 8, 9, and they sell at 11. Buy 8, 9, and 11. So if you spot this consolidation zone break, and with the gap down and volume is huge, what are the chances that okay, the moment you buy CCL puts and it will just go up and say, okay, you bought the puts, now I'm going up. Well, if it goes up, I will lose, but I don't mind buying 50, 60, 70 cents put. So, you know, broke the consolidation zone, I go short. So now what happened? So I receive an email saying, this stock is making is at the 52-week low. So why you are buying puts? So so think about the thinking of that person. So what kind of thinking? Thinking is that the stock which is trading at 52-week low will not go down. Maybe, or the stock which is trading at 52-week high, it will not go up. Maybe not. But after all, the new 52-week highs are made, new 52-week lows are made, or somebody or the same person said, okay, so 1 week, the support of 1 week, 1 year is more important than the support of let's say 1 month. Maybe, maybe not. Why would I think that the support of a 1 year is more important than a support 1 month? Maybe that's your belief. Maybe I'll give more weight to the support which is formed at 1 month ago, not the 1 year ago. So you see what happened here. So the person sent me email saying, why are you buying puts when it's trading at 52-week low? So a new low is created. Boom, 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 down. So the belief the trader had is a faulty belief, is not useful. He needs to change, do something about the belief that the 50, when something is at trading at 52-week low, I shouldn't go short, or I shouldn't go long if something is trading at 52-week high. So that belief is faulty. So that's where the traders get clobbered. You need to know what else is happening here. So 52, 53% gain, not bad. CPB puts, so Campbell soup. So when Campbell soup was going down, Pepsi was, I think, was also going down. So Campbell puts, although I don't trade Campbell put, but I saw the resistance here, and trading, you know, fell down. So I said, what are the chances of that it will just go up and conquer the resistance? What are the chances that it will conquer the resistance or to fall? So it fell because the chances. So you assign the probability. So traders need to not only learn about in trading. You don't just learn about the trading. You have to assign some kind of a probability. What is the probability that it will go up or go down? If you do some kind of analysis, the probability is high that it will go down then go up. CRUS puts, it gap down again. There is a big resistance here. So what are the chances that if I buy puts, the CRUS will just start moving up because you know I bought puts? What are the chances? Where after creating this big resistance, it just tanked. CRUS puts just they just tanked. Why? Because the chance. I mean, I may be wrong. It could go up, but it did not. So why I exited here? Because this is where the support is. So I exited here. FSLR puts. So now FSLR. So here is the puts. Here's the chart which is creating resistance and creating the top after having a super move up. So super move up, creating all this back and forth. So what are the chances that FSLR may go up above 140 after banging its head 3 times or 4 times? So I'm counting, I'm doing my list at 1 time, 2 times, 3 times. So it's not only one or two, 3 times. It's like uh, 10 times is trading in this zone. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is 11 times if I'm counting. And I can also count how many red days, how many green days. So if I look at it, there are more red days than the white days. And there are more wicks on the top than the wicks at the bottom. So when the wicks at the top, maybe there is a resistance here at 140. So I better position myself at the puts and see what happens. So it faked. You see here the fake, and I got out. So held on, fake, moved down one. So 40% gain. It took time. How many days it took? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. On the 14th day, so I'm counting the number of days I'm in the trade and then comparing it with the percentage gain. So I'm counting and I say, okay, number of days in the trade 14, percentage gain 40%. There was a loss. So when I put all this 2 plus 2 together, I come up with the answer 5. So I say, okay, I need to exit. I'm being greedy if I don't exit because I'm holding this position for 14 days. Once upon a time, I was losing money here. It's trading at 50-day moving average. It's showing some white candle. I don't know. It's a long-term uptrend stock. So it did not fall the way I expected. I have 40% gain. I get out. So I got out. Gill puts. So what are the chances that the Gill after gapping down, after gapping up. So when the stock gaps up and it gaps down, that's a no-no. That's okay. Why did you gap up and then why did you gap down? What's going on? It's like a kid jump up and then falls. So then you tell the kid, hey, what's wrong with you? So it's the same way, kid, you gapped up and now gap down. What's wrong with you? Something wrong. I position myself at the puts because worst come worst, it will say, okay, I trapped you, haha, and then it goes above 69. So if it goes above 69, then you say, son of a gun, I'm out. So, but what are the chances that it will continue another 1 or 2 days? So you see what happened? So all the buyers, so imagine these buyers, somebody bought calls on this gap up, somebody bought shares, some news came, and it gapped up. And what it did, it's like a twinkle, twinkle, little star. So this is a twinkle, twinkle, little star. It just did that, and then this star just crashed. So what are the chances that this, after buying puts, the stock will not go down and go up? So market went down, it came to 50-day moving average, made 52% gain. KMX puts. So what are the chances of KMX after trying to attempt to go long, is doing this, that it will suddenly run up and go up and say, okay, you bought puts, now I'm going up, you will lose money. So if it does that, if it goes above in this zone and it stay and conquer, then yes, I'm wrong. So it did, it crashed further. So it broke the support. So here was the support at 75, it crashed. So when the support is broken, you go short because you know when the support is reconquered, I have to get out. So you went short and you exited here. LVS calls. Yeah, this one was this one we bought at the news. There was a news from Macau, sudden gap up. So you would say, okay, well, so this is not a twinkle twinkle little star. There is a difference. This one, maybe there was something on the here. You see here, maybe that's what I saw. This one, this candle, look on the left side here. And so here, gap. People losing money, those who are buying here, they are all losing and they got out. So it was a one-day phenomena. Whereas LVS, so when LVS moved up, it moved up with a big volume. There was a big news. So I went long on LVS at 39 something. And then it pulled back 50-day moving average, 200-day moving average, and finally when it rocketed upward, gave us 42% gain. Netflix puts. So Netflix is a very dangerous stock because it can go up and go down, and can so make you lose a lot of money if the options are very expensive. So very expensive, not, I shouldn't say expensive, but high price. There's a difference between being expensive and high price. Not everything which is high price is expensive. They could be cheap. So it depends. So it's a high price. So it's a high price, and Netflix, it was not a good trade. So if you look at it, Netflix was not a good trade. So it's just, this was a risky trade. I should not have taken this trade. It was sitting at 50-day moving average. This is the support level, and maybe the market was not good. So I went short, and then I recognized that is not a good trade. It's hanging on to the support level. So I exited at 17-18%. But for 17-18% on Netflix, from the dollar point of view, is like $500 per contract, because it's high price contract. So you're buying at $2,000 per contract. And if you're making 17-18%, you're making 400. So from the dollar point of view, it looks big. But so dollar is not the barometer. The percentage is the barometer. So the percentage gain was only 1757. From the dollar point of view, is 400. And the reason also we get I don't send this big high price, because traders, they don't care about their portfolio size. They just jump in. If they have a $5,000 portfolio, they buy $2,000 contract. They shouldn't be buying $2,000 contract. So I hesitate to send a high price trade. Then so now what happened? Turn around, Netflix. I did not know. I just saw this. So I turned around and bought the calls and exited same day. So turn around, bought. So earlier had puts, made 17.57%. Then turn around on the calls, and I think exited same day and made 24-25%. So 24-25% is another $400-500. So just so recognizing that this trade, the put trade, was not good trade, because expecting a big crash and it didn't happen. Rather, the market was holding on to it, and then next day when they start moving, got in and got out same day at 25% gain. PayPal. So PayPal, when PayPal is moving down, so Visa, MasterCard and Square and all that, you have to evaluate and see what else is happening in this space. So what are the chances of PayPal to go down or go up after hitting this resistance level? It went down. We made 26% gain, and recognizing there's a white candle forming. So white candle forming, the reversal is happening, and this another tiny white candle created. So there's no more sellers. So this down move is over. We covered our PayPal puts. Now look at the run puts. So this is where the resistance is has been created. You see all the resistance level. So when the resistance is there and the red candle is forming on a red day, what are the chances that the run will go up or go down? By just looking at this, and here's the resistance level. What are the probability? What are the chances? So when you assign your chances, it comes to going short. So we went short, and this is what happened. We went short, and then run just tanked. So 50.43% gain. Here is the resistance level. So identifying this resistance and counting and figuring it out. TTD puts gap down. So what are the chances that TD will go up after hitting all these resistance and gapping down? So when there is a resistance there, and then there is a gap down, and then the market is tanking, and then there are other stock in the same space, they are going down. So when you put all this, then you just take a chance. You just say, okay, I buy puts. So next day, got out 15% gain. I'm not sure why we have 50. Maybe it was a high price option, so 15% on the next day. VLO. So we trade VLO calls and puts. So by looking at this stock, maybe the oil stocks were moving. So when the oil stocks are moving, I go through the list quickly and identify based on my belief which one is looking better. Sometimes two or three are looking better. Sometimes I just say, okay, which one is the best right now? So VLO bouncing went below 200 and then bounced back up. So when the stock goes below 200-day moving average and then it bounced back up, is telling us that the 200-day moving average is supported. When the stock gap up and gap down, that's another signal. When the stock gap down and gap up, that's another signal. So all these signals, the sentiments are changing. So you have to recognize the sentiment. So it went down below 200-day moving average and then it started to hug and then it started to move up. So I recognize that, and all oil stocks are moving. It's not that hard to see the crude is moving. There's some news, and then other stocks are moving. Which one to buy? So bought the VLO calls and sold into the resistance. Sold into resistance, 27% gain. So this is the end of the chart. So this is from the swing trades or swing light. So swing and swing light, they are on the website. So we do all the work. We give you all the trades, buy price, sell targets, provide you via email and SMS, guidebook, 71-page guidebook. There is another one, 25 or 21-page guidebook, etc. And we do all the work. We have automated a lot of stuff. Automated doesn't mean that the trades are just automatically generated. These people say, oh, AI. They use the word AI, just to trap the AI word being used. So we don't have any AI. It's all trades are handpicked, but we do have a lot of automations in terms of monitoring the trade, in terms of sending you the alerts, and stuff, or taking care, through email and SMS and phones. So that's it, and I will see you some other day. Thank you. If you have any question, please send email to support@tradegenie.com or coaching@tradegenie.com. Thank you, Andrew. I'll see you, and I need to talk to you later sometime, Andrew. Okay, thank you. Bye.